Hey everybody, Economic Ninja here. I want to talk today about Evergrande and the contagion effect that it is having and going to have even more into the future, into the economy as it spills over into China and it actually spills over into the world. And I want to also talk to you about what I believe the reason why you're seeing gold and silver going down and you're going to see it get a little worse. Okay, we're going to give you some historical perspective. So stick with me through this video because I'm going to be going through different slides and showing you, putting into context what's happening right now as compared to what happened in 2008 when Lehman Brothers collapsed, okay? So right here it shows you it could have a domino effect on China's property sector. We already know that. That's low-hanging fruit right now, in my opinion. It says the spillover of the crisis in the Evergrande group into other parts of the economy could become a systemic problem. This is literally, it is an absolute certainty, all right? Evergrande bonds are everywhere. There's so many people own them, it's crazy, including US-based pension funds, okay? Now, I'm not saying that if your pension fund has Evergrande bonds, it's going to go belly up. That's not the case. Point being is that there are deep roots all throughout the world's economy when it comes to Evergrande, okay? They own 2% of China's real estate. That is absolutely huge. And I want to make this very clear too. A few days ago, or no, maybe it was over a week ago, when I said that Evergrande isn't Lehman Brothers, it's the Bear Stearns moment. I want to put that into a historical perspective of when Bear Stearns had collapsed and closed their doors in relation to when about 5 to 6 months later when Lehman Brothers collapsed, okay? I want to make this very clear. The size of the Evergrande bankruptcy in dollar terms is larger than Lehman Brothers. As this story unfolds, you will start to find many layers, just like what happened with the mortgage-backed securities of Lehman Brothers. We're going to see what happened with the commercial mortgage-backed securities of Evergrande, and it's going to be big. Like I said about a month ago when I did a video on CMBS, that stands for Commercial Mortgage-Backed Securities, I said by January everyone's going to become a professional in this because it's going to affect everyone in the world. And it looks like I'm right on that. So it says these developers may sell individually, but when combined, they make up about 10 to 15% of the entire market. And this is a Chinese market, okay? So it's a big company. It's massive. So first, I want to take you to here. This is a story that was done in CNBC on September 16th, so just 4 days old. The stock market is undergoing a slow motion deterioration with pockets of shares down 20% or more. So first, I want to explain to you, as we're seeing the stock market hitting these all-time highs, I want to emphasize that these indices, many of them, are propped up by literally just a handful of stocks, okay? You've heard the famous FANG stocks, which stand for Facebook, Apple, Google, Netflix, and completely blanking out on the other one. No, that's it, sorry, FANG, and then I'm thinking an S. So right here, it's showing you that behind the scenes, the stock market is slowly deteriorating. Now, check this out. We're going to go back to 2008. And then we're going to get to the price of gold and silver and why it's going down. And why I believe it's actually going to get worse, a little worse. And before everyone goes, but you've been talking so highly about gold and silver. Stick with me till the end, and I'm going to explain why this price shouldn't matter to you. All right. So, and again, guys, I'm not a financial advisor. I'm not a financial professional. I'm just a guy. I'm just a dude with a bro hawk and a dream. But really, I can't even joke around right now because this really is happening in real time. So, and it's exciting and thrilling when you know it's happening and you're prepared for it, okay? So that's the silver lining in all this. All right, here's the Dow Jones, okay? The Dow Jones topped out right here around October 2007. And it sounds funny. Look at this massive correction from 18,000 and change to where eventually down here it should be what? Yep, February 2009, we ended up at 9,000 points. 50% crash. That is a crash in my opinion. For all those people that say the market isn't going to crash, I look at a 50%, that's not a haircut, that is a crash, all right? It also did, the sad thing is it also did the exact same move in 2000, 2001. with the dot-com bust. But you see these crashes don't happen overnight. The actual Great Depression did not happen overnight. But you have these big slam downs, go over like a week's period. But really, it's a slow burn. I mean, this was from September of 7 till February of 9. That's what? A year and a half, maybe a year and 3/4, the time period. But I want to show you something. So now, from September 2007, remember, this is when things were going really bad in the markets, and people didn't realize it. But by the spring of, let's see, this is right here, spring of 2007 was when people were getting handed stimulus checks. The entire country got stimulus checks, and it peaked. Even though things are bad, everyone's getting stimulus checks. It still peaked up here. And then it started its slow burn down until it really started ripping from August. And this is when Lehman Brothers, the announcement that was happening in Lehman Brothers, and I believe this is what you're about to see with China. It really started moving downhill into September right here, September of 2008. This is when it just really started to free fall. Now, I want you to keep in mind this chart before I'm going to show you another one, okay? Now, as this is happening, stocks are going down, hedge funds are freaking out, banks are freaking out, and they need to raise capital, right? Because they're invested and they are leveraged. And so they need to raise capital to make sure that they're not going to get literally a margin call from the Federal Reserve. So banks are raising funds, hedge funds are raising funds. Well, how do you raise funds? You have to sell things. If the amount of cash you're sitting on reserves, like let's say a hedge fund has 10% in cash at any given time, any given day, and the fall of their assets keep going worse and worse and worse down, then what they have to do is they have to sell their assets, some of their assets. Well, when it comes to hedge funds and banks, what are their stable, their emergency funds usually kept in outside of cash and bonds? It's things like gold, it's commodities, things like that. They always allot a certain percentage of their capital to a insurance sort of play, right? And so what they start doing is they start rapidly selling that. Now I could show you the gold chart, but I'm going to show you the silver chart because it's just more pronounced in what happened. Here we're going to go back to February of 2008. Okay, now the stock market had already started falling. It had been going down for quite some time. And silver actually peaked up here for at $25. We're going to sit right here around the $20, $21 area because that is a standard, right, of what it was for that time period. Well, it was doing really well until, remember when I showed you in the Dow Jones, it started to move down in July, but in August, right here, is when it really started to come down. But I believe there was already massive rumors about Lehman Brothers in July of 2008. And what happened was people started to sell their insurance and raise cash. And then going into, if you see right here, this moved from $15 to where it bottomed at $12 and change. It was just a massive move. But the one thing I want to make, and let's do this. Let me see if I can back out just another. Let's do this. So this is the silver chart. This is what we're looking at right here. This is July down to October, right? But if you think about it on a multi-year trend, it's still doing really good, right? People would say like later on in life, that's a correction. Well, that's just a healthy correction on the way up to $50. But the thing is this is not how people were not looking at this as a correction back then, right? But gold did a very similar pattern, just on to a lesser extent. So they were raising funds. Well, in this amount of time, the dollar actually strengthened. Why? Well, it's because as hedge funds, banks, investors were selling off assets, they were raising cash, which means there was a demand for cash, and it actually caused the USD to increase in value. All right. Now, I want to show you something that's happening right now. As of literally, this is tonight, we're seeing that it's not too big of a move, right? This is the 1 day, the US dollar index, all right? Last 5 days, let's do that. What's going on now? All right, last 5 days, we're seeing a little bit of an uptrend, right? On dollars, so it looks like there may be something happening here. If we pull back to a 3-month chart, you'll see back here in July, the USD peaked at 93.57. And if you're looking at right now, 93.33, we're getting pretty darn close to the 3-month peak in the dollar. And let's see, let's pull back a little bit more. If you look at historical right now, we're bumping a historical high for the last 6 months. Let's go back a full year. So if you look back here, there was some interesting stuff happening in the markets. I was talking about, my point being is it's hard to get through all this because there's just so much going on right now. Right here, 93.23, April of 21. We're about to bump that right now. But what I think you're seeing in this little glitch right here, and I know you might go, Ninja, I don't, think this is a big deal. I think what you're seeing is you're seeing people running to cash right now and cash equivalents because of a fear of how big the contagion is with Evergrande. So if that's happening, and we are right now repeating not a Lehman Brothers moment, I believe it's the Bear Stearns moment, okay, of the spring of 2008. That is why you're seeing the price of silver coming down right now, okay? So I believe it could actually go a little lower than this. Now, let me explain something. The price of spot during these times, when the paper price gets, and I don't think this is getting completely clobbered. I think this is, and I do believe banks are taking advantage of this opportunity to hammer down the paper price of gold and silver, which are fake, right? What I believe is happening is you're going to see the market's getting tight. And so the VIG, the price over spot, is increasing. And this exact same thing happened right back here. When, right here, when a Silver Eagle was about $25 to buy, by this point right here, it was about $21 to buy. Even though the price of spot had collapsed by darn near 50%, right? It had, the actual coin price only went down $1, $2, or like $3, because the price of spot increased so much because there were so many value investors trying to get their hands on physical. Okay, so now you're probably asking yourself, okay, what do I do with all this information, Ninja? And if you've made it this far, do me a favor, hashtag Silver Squeeze in the comments below. That'd be great. And I know you made it this far, and I absolutely love that. Thank you. Well, right now, we're looking at the price of silver just dipping barely, but it's down 1%, just barely, right? But we've already seen a pretty good move down to the downside. I think these are the times to sit back, quite frankly, when we start to watch the price over spot rise and the market's getting tight, sit back and just wait for deals. Those happen usually at your local coin shops when they're not focusing on the macro picture. And if you can find a deal, cool, compare them with online dealers and stuff. But personally with me, I wouldn't be diving in right now, okay? Unless you can find a smoking deal. I think that over the next week, we're going to know how bad this gets. Now, I've said before, I'm on record for saying that I believe that there's a very, very big correction, a deep correction coming in the year 2022, all right? And so I believe that's going to happen, but this is still something to be watching for, because as we're heading down now, some people just buy every week. They buy some silver, they buy some gold, they buy a little food. That is awesome. If you're dollar cost averaging, you can't go wrong, okay? I'm talking to the people that are waiting on the sidelines with big money, okay? You have to just wait to see where this thing goes. Now, I know there's a ton of orders that have been coming in, and the price was right a couple days ago, but as these VIGs, just keep an eye on the VIGs, as they start to increase, they're going to increase as the paper price gets smashed down, okay? Another thing that you want to look for is deals in the mining sectors. When these prices come down, the shares of the miners get super cheap because of a fear, not only fear trade, but the volatility compared to the paper price of gold and silver is phenomenal. So that's something, that's where you have some real opportunities looking in the mining sector, okay? But the problem is, here's the problem. Unlike physical, owning physical gold and silver, if the paper price here gets clubbed down to, like, let's say 18, right? And the miners get smashed down, let's say 25, 30%, you're going, okay, that's a smoking deal. It's almost like you don't want to put all your money into it. You want to wait back, because then if it gets smashed down again, like what we saw to silver, let's go back to that chart. What was it down here? April of 2020, when we saw, I even think I saw a paper at less than 15. I want to say it was like $11 in one day in intraday trading. The price of the miners get just hammered. However, if you were invested in precious metals mining companies during this last bull run, oh my goodness, you were making a ton of money, because to the downside it gets exaggerated, to the upside it gets exaggerated. All right, guys, I hope you got something from this. This is one of those very serious wait and watch what's happening in the markets right now, because I think Evergrande is going to become more and more of a story. There's no hiding the fact that those CMBSs are all over the world, and that everybody's going to take a small haircut on whatever they had. Unless, and here's the caveat, China can come in and bail them out. I don't know if they will, though. I don't know if they will, because the thing is, the government knows that if they bail them out, there's a lot of other companies behind them that are having issues too, that go, oh, okay, well, we can get bailed out now. So this is going to be really, really, really interesting to see, guys. I hope you got something out of this. Thank you so much for your time. With that being said, the Economic Ninja is out.